Hello and welcome to Unacademy, India's largest online learning platform where you get a world of courses, resources, content, live and recorded sessions of your favorite educators to help you in the preparation of your examination. Also welcome to Crack CA exams with us. That's the vertical of Unacademy that caters to the students of CA Foundation, CA Intermediate and CA Final examinations to help them in their pursuit and journey of preparation for the CA Foundation, CA Intermediate and the final examination. And in this journey with Crack CA exams with us, Unacademy provides you top educators, quality content and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. I welcome you to the session. Before we begin the session, a little about the educator, that is me. Hello, I'm Prathik Gupta. I am a Bachelor of Commerce from Christ College, Bangalore University. I am an Associate Member of the Institute of Chartered Accountants of India, an Associate Member of the Institute of Company Secretaries of India, and an Associate Member of the Institute of Cost Accountants of India. I am also a law graduate from Karnataka State Law University and currently a practicing Chartered Accountant. I am also a visiting faculty for CA subjects and an educator for CA students both offline and online. Prior to starting on my own, I worked with SR Bartley Boy & Associates, that's the Indian member firm of Ernst & Young Global, EY Global in the Audit and Assurance Department, and Ernst & Young India, EY India in the Mergers and Acquisition Department. I also worked with the Manipal Group, Bangalore, and was the corporate controller of their Indian entity and the German subsidiary located in Frankfurt, Germany. It's when I got back from Frankfurt, Germany that I decided to start my own, and here I am today with this opportunity to take this session for you fine and enthusiastic CA aspirants. Thank you so much for joining into my session today, and anytime during the session, in case you have any questions, any queries, please feel free to ask me and I will be happy to answer it for you. And you want to have any discussions, anything related to the subject matter, the CA course, also feel free to drop in a line and we shall have that discussion. Apart from being present today on the YouTube channel of Unacademy, I also conduct various special classes on the YouTube platform. That is on the Unacademy platform. I beg your pardon. So you can also access my sessions and my special classes on the Unacademy platform, more about which I will tell you a little while later. All right, so thank you very much and welcome to my session. Now, the Unacademy has three platforms. Unacademy has a platform on YouTube, what you're watching today. It has another platform for special classes, which is there on the Unacademy Learning app, which I urge and encourage each one of you to visit. And also, most importantly, Unacademy has the Plus platform, which is a payment-based subscription model and has various packages which help you accelerate and prepare for the examinations of your choice. So once you join Academy's Plus platform or Plus course, what do you get? You get daily live classes where you get to choose your educator, choose your topic, engage in discussions, ask your doubt and answer polls. Just one second. And answer polls. All this while your class is going on. Yes, you heard it right. All this while your class is going on. You do not need to fix an appointment. You do not need to schedule another date. You do not need to wait for the class to get over. You can ask your questions and have discussions all on a live basis with your educator in your Plus platform. Okay. Now, secondly, you get live tests and quizzes. So the Plus platform of Unacademy conducts live quizzes and tests which help you in evaluation of your preparation with the regular mock tests and quizzes that are conducted in each session to get detailed analysis of your performance. Now, what happens once you get detailed analysis of your performance? This helps you in identifying your weak areas, strong areas, so that you can spend adequate time on those areas accordingly. So what happens there, once you attend the live quizzes, mock tests and other tests conducted by the Plus platform of Unacademy, it helps you in identification of your strong areas, weak areas and your not so strong areas, so that you can channelize and divert your time accordingly to more time on your weak areas, a little lesser time on your not so strong areas and less time on your strong areas. So this helps in maximum utilization of your time and also conversion of your weak areas to strong areas. All right. So that's what these live tests and quizzes on the Plus platform do for your preparation. Thirdly, the courses provided by the Unacademy Plus platform are structured. They are structured in the sense that all the courses provided on the Plus platform are in line with your syllabus to help you best prepare for it. So you can rest assured that once you complete a particular course on the Plus platform of Unacademy, you have covered your syllabus for the respective examination, and there is no important or major point left out. So that way, the courses provided by the Plus platform of Unacademy are structured. And lastly, and most importantly, the one subscription to the Plus platform of Unacademy will give you access to all the live and recorded courses of your favorite educator and topics right from the comfort of any of your devices. You can view them on your desktop, your laptop, your tablet, your mobile phone, and there is no restriction. You can also watch it wherever you are. You don't need to be home, you don't need to be in the office. You can watch it on the go, when you're in a taxi, when you're in a bus, when you're waiting for someone, when you're in between meetings, or you're getting back home from work. You can make use of that time which you would otherwise waste, and this is all possible with the Plus subscription of the Unacademy platform. So I strongly encourage you and recommend you all to get on board the Plus platform of Unacademy and take advantage of the daily live classes, the live tests and quizzes, structured courses, and the unlimited access to the live and recorded courses that the Plus platform of Unacademy has to offer you. More about the Plus platform in the following slides. Now, for those of you who have downloaded and are using the Unacademy Learning app, I thank you for your support, and I request your support in the future as well. For those of you who have not yet downloaded the Unacademy app, I request you to go to your Play Store and download the Unacademy Learning app. Put in your mobile number, you get an OTP, and using that OTP you register on the Unacademy Learning app. It is as simple as it sounds. It's nothing complicated. So you go to your Play Store, download the Unacademy Learning app, enter your mobile number, enter the OTP, and you register on it. And here you get access to the world of Unacademy in terms of you get access to the various special classes on various important topics conducted by world-class educators on the Unacademy platform, using the world-class content and giving you an overall great experience. So the special classes are one of the main components or ingredients of the Unacademy Learning app, in addition to your Plus courses, which are comprehensive and complete courses which will help you and accelerate you in your preparation for your respective examinations. So I request you all to download the Unacademy Learning app. I'm sorry. Register on it using your mobile number and OTP, and make use of the various special classes and the Plus courses that are provided on there. Okay, so I look forward to seeing you on the Unacademy Learning app very soon. And in case you have any questions about the usage of the Unacademy Learning app, you can always chat with our people and they will help you out with the questions. All right, so let's move to the next slide. Now, like I told you, Unacademy's Plus platform is a payment-based subscription model which has various packages for the various courses. As I'm part of the CA Foundation and Intermediate subscription, the CA Foundation and Intermediate subscription packages contained in the Plus platform of Unacademy are as follows. The courses provided are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month cost, the 1 month package cost is rupees 3,500. The 3 months package cost is rupees 8,750. The 6 month package cost is rupees 14,000. The 12 month package cost is rupees 17,500, and the 24 months package cost is rupees 21,000. While you're free to make a choice of the package you want, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the listed price. I repeat, Prathik, Prathik, that's me, to get a discount of 10% on the listed price. So the after discount price of the various packages of the CA Foundation and Intermediate subscription are: the 1 month package will cost you rupees 3150, the 3 month package will cost you rupees 7875, the 6 month package will cost you rupees 12,600, the 12 month package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see there is an immediate saving of 10% by using my code Prathik, Prathik. Okay, now I personally would recommend you to go for the 12 months package or the 24 months package for the following reasons. If you look at the per month cost of the 1 month package and you compare it with the per month cost of the 12 months and 24 months package, you will see that it is almost less than 1/3 of the 1 month package. So it brings you substantial savings right away. And not only this, right away, one second. Okay, and not only this, as the CA Foundation and the Intermediate subscription package is provided to you in one subscription, please remember it takes about a year's time for you to prepare and clear the foundation and the intermediate examination. So it makes sense for you to go for at least the 12 months package so that you get the entire duration of the CA Foundation and the Intermediate subscription with world-class educators, quality content, and overall a great learning experience, all at a very cost-effective price as well. So my personal recommendation to you is to either go for the 12 months or 24 months package. But having said this, you're free to choose the package of your cost, of your choice. You could choose the 1 month package, 3 months, 6 months, 12 months, 24 months package, while I recommend you to go for the 12 month or 24 months package. But please do not forget to use the code Prathik, Prathik, to get a discount of 10% on your listed price. Okay, and there is also a no cost EMI offer available for the 6 month, 12 months and 24 months subscription. So please make use of this. For those of you who do not want to pay the entire amount upfront, you can please avail the no cost EMI option on the 6 month, 12 months and 24 months subscription packages. So my personal recommendation is to you to get onto the Plus platform as soon as possible and accelerate and enhance your preparation for the CA Foundation and Intermediate examination. So I look forward to see you there soon. And like I told you about the platform of Unacademy, there are various special classes. I have conducted various special classes on the Unacademy learning platform, which you can access. Ask me questions, put in your doubts, and I will be happy to clear it. You need to look me up with the name Prathik Gupta, Prathik on the Unacademy app, and you will find my sessions. So I hope you make the most of it. Join the Plus platform of Unacademy as soon as possible and benefit from the opportunity provided. I look forward to seeing you there soon. All right, so let's move to today's session. Today's session is on, just one second. Today's session is on the Companies Act 2013, Audit and Auditors. Now, Companies Act, now we are taking this session for the CA intermediate students, and this is a part of their curriculum as well. So, Audit and Auditors. Now, Companies Act 2013 is applicable to all private limited and public limited companies, all one-person companies, OPC, government companies, small companies, and Section 8 companies. Companies Act 2013 came up into existence in 2014, I think. And yes, it governs. Earlier to this, we had Companies Act 1956, which administered all the private, public, and other companies which were incorporated in India. Okay, so the topic we're going to do today is on audit and auditors. That is, what is the procedure about the audit of companies under the Companies Act 2013, and how are the auditors' appointment, who's eligible for appointment, how do we remove the auditors, what are the duties and powers of auditors. So all these discussions we are going to have in today's session. Having said this, there are various other sessions, special classes and sessions on YouTube that I have taken on Companies Act 2013. Please, if that is a topic of interest to you, please do visit these sessions on the special classes of Unacademy app by my name, and also on YouTube, and please like them and share those videos. And in case you have any questions, please ask me. I will be more than happy to answer them for you. So let's proceed with Companies Act 2013, Audit and Auditors. Now let's get an introduction. Large business corporations are managed by the directors who represent the members who are real owners of the company. In the absence of any check, the directors may mismanage the finances of the organization. So this is the important point: may mismanage the finances of the organization, an important term. Thus, the members appoint auditors to look into the true and fair view of the financial affairs of the company. These auditors are independent from the management of the company and hence can express an unbiased opinion. So, the introduction, before we proceed, the introduction is simple: that the shareholders or members of a company are the real owners of a company, and they appoint a board of directors to take care of the affairs of the company on behalf of the shareholders. So it could give an opportunity for the directors to mismanage and mishandle the finances of the company. So that is why the members appoint auditors to look into the true and fair view of the financial affairs of the company, so that there are no shocks that the shareholders get and their money is in safe hands. These auditors are independent from the management of the company and hence express an unbiased opinion. The auditors are not related to the company or the management of the company in any way, and that's why they are called as independent. And then they are expected to provide a unbiased opinion. All right, please take about 30 seconds, go through this, and then we proceed. Any questions? Please ask me. Okay, so let's start off the session. We start with the appointment of the auditors. So now Section 39 of the Companies Act 2013 deals with the appointment of auditors. According to this section, the appointment of auditors dealt with Section 139(1). Every company shall at the first annual general meeting appoint an individual or firm as the auditor of the company. The auditor shall hold office from the conclusion of the first AGM till the conclusion of its sixth AGM, and thereafter till the conclusion of every sixth AGM. And the manner and procedure of selection of auditors by the members of the company at AGM has been prescribed under the Company's Audit and Auditors Rules 2014. Alright, so now the first point says every company shall at the first annual general meeting, it is also known as AGM, an annual general meeting is to be held by a company within 6 months from the end of its financial year normally. Okay, whereas the first time a new company can have its AGM after 15 months of its incorporation as well. Okay, so every company shall at its first AGM appoint an individual or firm as an auditor of the company. Now, who is eligible? It has to be a CA firm, a chartered accountant, or a firm of chartered accountants that can be appointed as the auditors of a private limited company. All right. Okay. The auditor shall hold office from the conclusion of the first AGM. So that auditor who is appointed in the first AGM shall hold office for a period of 5 years till the end of the sixth AGM. So first AGM plus 5 AGMs will be sixth AGMs, and thereafter till conclusion of every sixth AGM. So you see that the auditor has to be appointed for a block period of 5 financial years. And the manner and procedure of selection of auditors and the manner and procedure of the selection of auditors is contained in the company's Audit and Auditors Rules 2014. So according to the rules, the manner and procedure for selection and appointment of auditors are, okay, in the meantime, please take about a minute, go through this, and then I proceed. Melody. Okay, now these are certain categories of companies which are required to maintain an audit, which are the company which is required to constitute an audit committee. Okay, now who is responsible for appointment of the auditors? A company is required to constitute an audit committee under section 177. The competent authority to appoint the auditors will be the Audit Committee. A company which is not required to constitute an Audit Committee under Section 177, the competent authority to appoint the first auditors will be the Board of Directors. The competent authority shall take into consideration the qualification and experience of the individual or the firm proposed to be considered for appointment as auditor, and whether such qualifications and experience are commensurate with the size and requirements of the company. So we will talk about Section 177 a little later. But a company which is required to constitute an audit committee under Section 177, the audit committee will be the committee that is responsible for appointment of auditor. Okay, and in case the company does not have an audit committee, then the board of directors will be responsible for appointment of auditor. Okay, the competent authority, whether the audit committee or the board of directors, both shall take into consideration the qualifications and the experience of the individual or the firm proposed to be considered for appointment as auditor, and whether such qualifications and experience is commensurate with the size and requirements of the company. So whoever is the body that is appointing the auditor, whether it's the audit committee or the board of directors, they have to see whether the qualifications and experience of the individual or the firm of chartered accountants is considered fit for the appointment as such auditor, and whether they are fit enough to audit the size and requirements of the company. Please take about a minute, go through this. We are talking about appointment of the auditor. Okay, also the body that is responsible, the competent authority, shall have regard to the order or pending proceeding relating to the professional matters of the conduct against the proposed auditor before the Institute of Chartered Accountants of India or any competent authority. It may call for such other information, it may propose deem fit. So the competent authority, whether it's the audit committee or the board of directors, will first check whether the auditors are fit to do the audit, and will also see if there are any matters of professional conduct or any disciplinary proceedings pending against the auditor or the firm of auditors or chartered accountants in the Institute of Chartered Accountants of India or any competent authority. And it may call for such other information that may deem fit from the auditor to ensure or to satisfy itself of the auditor. So the competent authority may also ask for any more information that it wants from the auditors to satisfy itself about the appointment of the auditors. Please take about, okay, so that is to do with the appointment of auditors. So the competent authority, in case the company has a audit committee, then it will be the audit committee. In case it does not have an audit committee, then it will be the board of directors of the company. Then the categories of the company, and a company which is required to constitute an audit committee under Section 170 of the Audit Committee. Okay, the committee shall recommend the name of the individual or the firm as per the auditor to the board. So the competent authority, on being satisfied that yes, this is the individual or the firm who I want to appoint as an auditor, will recommend that name to the board for consideration. Then in case the company does not have an audit committee, then the board shall consider and recommend an individual or a firm as auditor to the members in the company in the AGM. So this is how the flow goes. A company which has recommend to board of directors, a company which does not have an audit committee, the board of directors will recommend auditor to members in AGM. All right. So this is the way the appointment of auditors will take place. In the case of a company having an audit committee, the audit committee will recommend the appointment of an individual or a firm of chartered accountants to the board of directors. In case the company does not have an audit committee, then the board of directors will recommend the auditor's name to the members in the AGM. Please take about a minute, go through this, and then we proceed. Okay. Now, like I told you, we will discuss about the companies that require to constitute an audit committee under Section 177 of the Companies Act 2013. For the purpose of constitution of audit committee, Section 177 of the Act, read with companies, meetings of board and its powers rules 2014. Provide that the board of directors of every listed company and the following classes of companies shall constitute a audit committee. So first condition is it should be a listed company, and then the board of directors of every such listed company shall constitute an audit committee. Now, who are those companies? All public companies with a paid up capital of rupees 10 crores or more. So firstly, all public companies which have a paid up capital of 10 crores or more. Second one, all public companies having a turnover of more than 100 crores or more. So the first condition was 10 crores or more paid up capital, turnover of 100 crores or more, and the third condition is all public companies having an aggregate outstanding loans or borrowings or debentures or deposits exceeding rupees 50 crores or more. So first condition is all public companies, listed companies which have a paid up capital of rupees 10 crore or more, all public companies, listed companies who are having a turnover of 100 crores or more, and all public companies which have a total loans outstanding, borrowings or debentures or deposits exceeding rupees 50 crores or more. So 10 crores, 100 crores and 50 crores. So all the companies, public limited companies which are listed companies which are following in these three categories are mandatorily required to have an audit committee. Okay, explanation. The paid up share capital or turnover or outstanding loans or borrowings or debentures or deposits, as the case may be, as existing on the date of the last audited financial statement shall be taken into account for the purpose of this rule. So now the question is the turnover, the capital, the loans, everything on which date? So the date is the date of the last audited balance sheet. So if the last audited balance sheet is on March 31, 2019, then the loans, the turnover and the paid up share capital as on that date will be taken into account. All right, please take about a minute, go through the slide, and then we proceed. Please note I have taken various sessions, special classes on Companies Act 2013 on my Unacademy learning app. You need to look me up by Prathik Gupta, PRATHIK GUPTA, and you will find all those special classes sessions there. I request all of you to go there and listen to the sessions and benefit from it. There are a number of sessions on special classes on Companies Act 2013 for the intermediate level. Please take about a minute more and then we proceed. Okay, now we go to the third point. Now we have discussed with point 1 and 2. Now we go to the third point, the manner of appointment of auditors. If the board agrees with the recommendation of the audit committee, it shall further recommend the appointment of an individual or a firm to the members in the AGM. So in case the company has an audit committee, now what kind of companies have an audit committee? Public limited listed companies who have a paid up capital of rupees 10 crores or more, who have a turnover of rupees 100 crores or more, and who have a total of outstanding and loans of 50 crores or more. So those companies have an audit committee. Now that audit committee will then recommend the appointment of the auditor of an individual firm to the members in the AGM. Okay, the members are the real owners of the company. If the board disagrees with the recommendation of the audit committee, it shall refer back the recommendation to the committee for consideration, citing reasons for disagreement. Okay, so firstly, the audit committee refers the case to the board. The board, if it is satisfied about the appointment of the auditor, will recommend the case to the shareholders or members of the company in the AGM. But if the board disagrees with the recommendation of the audit committee, that is, it says no, this auditor is not good, then it shall refer the case back to recommendation to the committee for reconsideration, citing reasons for such disagreement. If they get to know certain things about the auditor, that maybe he may not be able to handle that size of the company, or he's inexperienced, then the board may refer the case back to the audit committee for reconsideration thereof. If the audit committee, after considering the reasons given by the board, decides not to reconsider its original decision, the board shall record its reasons for its disagreement, and the committee shall send its own recommendations for consideration of the members of the AGM. And if the board agrees with the recommendation of the audit committee, it shall place the matter for consideration in the AGM. So now what happens, that if the audit committee gets the case back for reconsideration from the board, and the audit committee decides not to reconsider its original recommendation, the board shall record reasons for its disagreement with the committee and send its own recommendations for consideration to the member of the AGM. Then the board will again give its disagreements or its objections, and send the recommendations of the committee to the AGM, to the members in the AGM, and the members in the AGM will decide about what needs to be done about such appointment. Before the appointment is made, the written consent of the auditor to such appointment and a certificate from him or that appointment is made shall be in accordance with the conditions as may prescribe, shall be obtained from the auditor. So the company, before it makes an appointment of any auditor as its auditor, will take a declaration from him that his appointment, if made, will be made as per the rules and regulations of the Act. Okay, please take about 2 minutes, go through the slide, and then we proceed. Any questions, please ask me. Any questions, please ask. I'm taking it nice and easy so that you can understand what's happening, and also you have the time to ask me any questions. Okay, now we go to the certificate by the auditor. In the last point of the previous page, you saw that before an appointment, an auditor has to give a certificate to the company that his appointment, if it is made, will be as per the rules. So the company's Audit and Auditors Rules 2014 provides the content of the certificate. According to this, the auditor appointed shall submit a certificate that the individual or the firm, as the case may be, is eligible for appointment and is not disqualified for appointment under the Act, that is the Companies Act, the Chartered Accountants Act 1949, and the rules and regulations made thereunder. That means the first point he will say is that the individual or the firm is eligible for appointment and is not disqualified under the Companies Act, and it is also not disqualified under the Chartered Accountants Act 1949. Chartered Accountants Act 1949 is the act which regulates and governs every chartered accountant in India. So a person who is a chartered accountant will automatically fall under the provisions of the Chartered Accountant Act 1949 and the rules and regulations made thereunder. The second condition in the certificate will be the proposed appointment is as per the term provided under the Act. That means for a period of 5 years. The proposed appointment is within the limits laid down or by the authority of the Act. Every auditor or every chartered accountant or a firm of auditors in India has a certain limit of audits that they can take up. Okay, and these audits are basically counted for public limited companies. So the auditor also has to certify that if the appointment of that company as auditor of that company, if he takes it up, it will be within the limits laid down under the Act. Okay, so if in case he already has so many audits, then he cannot accept this audits unless and until he lets go of another audit. Okay, the list of proceedings against the auditor of firm or any partner of the firm pending with the respect of professional matter of conduct as disclosed in the certificate is true and correct. In case there is any proceedings being carried on by against the member or the firm of auditors, then that all those proceedings list should be given in the certificate, and he should also certify that the list provided is true and correct. The certificate shall also indicate whether the auditor satisfied the criteria provided under section 141, provides provision on eligibility, qualification and disqualification of auditor, which will be in force. Okay, so he also has to give a certification that he fulfills the criteria as laid down under section 141 of the Companies Act. Okay, please take about 2 minutes, go through the slide and then ask me any questions you have. Take your time, read the slide and let me know if you have any questions. Please take about a minute more. Let me know in case you have any questions. Then we go to the next point, communication to the auditor. Further, the company shall inform the auditor concerned of his or her appointment and also file a notice in Form ADT1 of such appointment with the registrar within 15 days of the meeting in which the auditor is appointed. Here, appointment includes reappointment. Okay, so now what happened? The audit committee has recommended to the board has recommended to the AGM, to the members in the AGM, and everything went okay, and they identified the auditor. Then they asked the auditor that, okay sir, we are planning to appoint you as the auditor of our company, please give us a certificate. So then the auditor gives you a certificate that he's not disqualified, it's within the limits, and he fulfills all the criteria as per section 141, etc, etc. Then that particular fact that he's appointed is communicated to him within 15 days of the meeting in which the auditor is appointed, and also a Form ADT1. ADT1 is filled, giving in details about the auditor to the ROC. Registrar of Companies, you fill a form IDT1 and file it electronically on the MCA website, which gives the information about the auditor to the ROC that he's appointed for a period of 5 years. Now, term of the auditor. Section 139(2) provides that listed companies and other prescribed class or classes of companies except one-person companies and small companies shall not appoint or reappoint an individual an auditor for more than one term of 5 consecutive years, as an audit firm or an auditor for not more than 2 terms of 5 consecutive years. Okay, so now the condition says that listed companies and other prescribed companies shall not appoint or reappoint, the first one, an individual as an auditor for more than one term of 5 years. We discussed that the period of appointment is block years of 5 years. All right. So an individual cannot be appointed for one term of more than 5 years, whereas an audit firm cannot be appointed as an auditor for a period of 2 terms of 5 consecutive years. So an individual can be appointed only for one term of 5 years, and an audit firm can be appointed for 2 terms of consecutive 5 years. This provision is not applicable to one-person companies and small companies. Okay, so it's only applicable to listed companies and other prescribed or classes of companies except one-person company and small companies. Okay, next. Rule 5 of the Companies Audit and Auditors rules have prescribed the following classes of companies for the purpose of section 139(2). All unlisted public companies having paid up capital of rupees 10 crores or more. That means public companies which are not listed on the stock exchange. All private limited companies having a paid up capital of rupees 50 crores or more. So either it is an unlisted public company having a paid up capital of rupees 10 crores or more, or it is all private limited companies having paid up share capital of rupees 50 crores or more. And it is applicable to all listed companies, but it is not applicable to one-person companies and small companies. So the classes of companies to which this term of the auditor is applicable is listed public companies, unlisted public companies having a paid up share capital of rupees 10 crores or more, private limited companies having a paid up share capital of rupees 50 crores or more. Okay, please take about 2 minutes, go through the slide, and then we proceed. Please read the slide carefully and ask me any questions you have. Please go through this carefully and ask me any questions you have. Take about a minute more, go through this, and then we proceed. Okay, all companies having a paid up share capital of below threshold limit mentioned in 2 and 3 above, that is 10 crores and 50 crores, but having public borrowings from financial institutions, banks, financial banks or deposits of rupees 50 crores or more. So the conditions are, firstly, it applies to all public listed companies. Then it applies to unlisted public companies which have a paid up capital of 50 crores or 10 crores or more, private limited companies with a paid up capital of 50 crores or more, and all companies having a paid up capital below threshold limit mentioned, that is 10 crores and 50 crores as applicable, but having a public borrowings from financial institutions, banks or other public deposits of rupees 50 crores or more. Alright, so that is applicable to that. Then we have a cooling off period. An individual or auditor who has completed his term, that is one term of 5 consecutive years, shall not be eligible for reappointment in the same company for 5 years from his completion of his term. So once a person, an individual auditor who's completed his first block of 5 consecutive years, for the next 5 years he shall not be eligible for appointment. An audit firm which has completed its term, that is 2 consecutive terms of 5 years, shall not be eligible for reappointment as auditor in the same company for 5 years from the completion of such term. So here we see the individual as well as the audit firm, if they have completed their terms, respective terms of 5 years and 2 terms of 5 years respectively, then they shall have a cooling off period of 5 years, and only after 5 years they shall be eligible for appointment. Let's take an example. XYZ Limited, which is a listed company, appoints Mr. Raghav as an auditor in its AGM dated 29 September 2016. Okay. Mr. Raghav will hold office of the auditor from the conclusion of this meeting up to the conclusion of the 6th AGM to be held in the year 2021. Now, as per subsection 2, Mr. Raghav shall not be reappointed as auditor in XYZ Limited for further term of 5 years. That is, he cannot be appointed as auditor up to 2026. So he's appointed in September 2016. He will be appointed till hopefully September 2021. But after that, till 2026, he again cannot be appointed as the auditor. Please take about 2 minutes, go through the slide, and then we proceed. Please ask me if you have any questions. Any questions? Please ask me. Any questions? Please ask. Okay, let's take another example. Mr. Raghav, XYZ, which is a listed company, appoints MS Raghav and Associates as an audit firm in its AGM dated 29 September 2016. MS Raghav and Associates will hold the office of the conclusion of this meeting up to conclusion of the 6th AGM to be held in the year 2021. Now, as per subsection 2, Mr. Raghav and Associates can be appointed or reappointed as auditor of one more term of 5 years, that is up to 2026. It shall not be reappointed as audit firm in XYZ for a further period of 5 years up to 2031. So they were appointed in 2016 September. They can hold their first term till 21. Then assuming they are appointed again, then they can hold their second term till 2026, but after that they cannot be appointed up to the year 2031. Okay. Further, whereas in the date of the appointment, no audit firm having a common partner or partners or the other audit firm whose tenure has expired in a company immediately preceding the financial year shall be appointed as auditor of the company for a period of 5 years. Okay, so further, as on the date of appointment, no audit firm having audit partner or partners to the other audit firm whose tenure has just expired. Okay, so that means in case there are any common partners with any other firm, so that firm will also not be appointed for a period of 5 years. Let's take an example again. MS Krishna and Associates in an audit firm having two partners, namely Krishna and Mr. Sham. Mr. Sham is also a partner of another audit firm called MS Kukreja and Associates. MS Krishna and Associates was appointed as the auditor in the company Golden Smith Limited for two consecutive period of 5 years. That is from year 2016 to 2026. Now, if Golden Smith Limited wants to appoint MS Kukreja and Associates as the audit firm, it cannot do so because Mr. Sham was the common partner between both the audit firms. This prohibition is only for 5 years, that is up to 2031. After 5 years, Goldsmith Limited may appoint MS Kukreja as its auditors. So again, any firm in which the partner is a common partner and that other firm has completed its term of 5 years, then the other firm in which there is a common partner also cannot be appointed as an auditor for another 5 years. Okay, please take about 2 minutes, go through this slide, and then we proceed. Please go through these examples. It's very important for you to understand this. So please go through this and let me know. I'm sorry, please take about a minute, go through this. So we are discussing about the appointment and tenure of auditors so far. All right. So one term of 5 years for individuals, whereas two term of 5 years for audit firms. Go through this and then we proceed. Please understand the examples clearly. Ask me any questions you have. Any questions? Please ask me. Okay, now we look at the transitional period. Okay, now what happens when there is a transition, when the Companies Act 2013 came into the picture? Earlier to this, we had Companies Act 1956. So what happens when this Companies Act 2013 was introduced? And that is called the transition period. Transitional period. Every company existing on or before the commencement of the Companies Act 2013, which is required to comply with the provisions as mentioned in above mentioned points A to D, that is provisions of this subsection, shall comply with those provisions within a period which shall not be later than the first AGM of the company held within the specified period under subsection 1 of section 96, that is after 3 years of the commencement of this act. All right, so any company during the transition will have to comply with these provisions within the first AGM of the company, which will be conducted under this act. It is also provided that nothing contained in the above mentioned points A to D, that is this subsection, shall prejudice the right of the company to remove an auditor or the right of the auditor to resign from such an office of the company. So it also means that none of the points above will stop the auditor from resigning in case he decides to resign. He does not mandatorily need to stay there for 5 plus 5 years. He can decide to resign from the company and leave the audit. So there is nothing in this section that forces the auditor to stay. All right, rotation of auditor under section 139(3) and 4. This is an important concept again. I request your attention. Members of a company may resolve to provide that in the audit firm, if the audit firm provided by them, the auditing partner and his team shall be rotated at such intervals as may be resolved by the members, or the audit shall be conducted by more than one auditor. So many times what happens, the members of the company may decide that this auditor has been in for too long, and to ensure better transparency and better results, they might decide that a particular auditor or audit firm will rotate as per the members of the company. Rotate means every year you keep changing it, or they might want more than one auditor to be appointed. Those are also called as joint auditors. The central government may by rules prescribe the manner in which the companies shall rotate the auditors. So if in case the members decide that they want to rotate the auditors, then the central government may prescribe rules by which the companies shall rotate their auditors. Okay, please take about 2 minutes, go through this slide, and then we proceed. See, rotation of auditors simply means 1 year it will be auditor A, second year auditor B, third year auditor C, fourth year auditor A again, fifth year auditor B, sixth year auditor C again. So that is called rotation of auditors. Now what rotation of auditors does is, as the auditor will keep changing every year, so there will be better review of the work, because obviously it's better when one auditor will review the work of the other next year. So it ensures better transparency and better reporting. Or if a company thinks that is too tiring to do this, it can appoint two auditors, two or more auditors together, and those are called joint auditors. Okay, now this is basically done to bring better transparency and reporting in the company system. Please take about 2 minutes, go through this, and then we proceed. Please take about a minute more, go through this carefully. Okay, shall we proceed? Okay, the manner of rotation of auditors. The manner of rotation of auditors by the company on expiry of their terms as provided under Companies Act 2000, Companies, Auditors and Audit Rules 2014. The committee shall recommend to the board the name of an individual auditor or of an audit firm who may replace the incumbent auditor on expiry of the term of such incumbent. Okay, so now we are talking about the manner in which rotation is done. The audit committee always recommends to the board the name of an individual who shall be appointed in place of the person who is moving out as the auditor. Where the company is required to constitute an audit committee, the board shall consider the recommendation of such committee, and in other cases the board shall itself consider the matter of rotation of auditors and make its recommendation for appointment of the next auditors by members in the annual general meeting. So now this clause is applicable when the company has an audit committee. AC means audit committee. And when the company does not have an audit committee, then it is the duty of the board of directors to recommend to the members in the AGM the new auditor in place of the auditor who's moving out. Okay, but in case the company has the audit committee, then it is the duty of the audit committee to recommend it to the board, which shall in turn recommend it to the members of the company. But in case the company does not have an audit committee, the board shall consider the matter and make recommendations for appointment of the next auditor by the members in the annual general meeting. For the purpose of rotation of auditors, in case of auditor, whether an individual audit firm, the period for which the individual or the audit firm has held office as auditor prior to the commencement of the act shall be taken into account for calculating the period of 5 consecutive years or 10 consecutive years as possible, as the case may be. So what does this mean? It simply means before the Companies Act 2013 came into the picture, if that auditor had held an audit for that company, then that period will also be computed in calculating the 5 years or 10 years as applicable. 5 years for an individual and 10 years for an audit firm. So the period that it served under the Companies Act 1956 will also be taken into account, and then the rotation will be decided. All right, please take about 2 minutes, go through this, and then we proceed. Go through the slide and then we proceed. Please take about 2 more minutes, go through this, and then we proceed. Take your time, try and understand the concept clearly. Okay, the incoming auditor or the audit firm shall not be eligible if such auditor or audit firm is associated with the outgoing auditor or audit firm under the same network of audit firms. The term same network includes the firm operating or functioning hitherto or in future under the same brand name, trade name, or common control. So whenever there is an outgoing auditor or the audit firm and there is a new auditor or audit firm coming into the company, the new audit firm shall not be eligible for appointment if they belong to the same network to which the outgoing auditor belongs. It means it should not belong to the same brand name, trade name, or common control, or it should not have common partners as well. For the purpose of rotation of auditors, a break in the term for a continuous period of 5 years shall be considered as fulfilling the requirement of rotation. So in case if there is a break in the continuous period of 5 years, if the auditor does not get a continuous period of 5 years, then that shall be considered as a rotation, okay, as fulfilling the requirement of rotation. If a partner who is in charge of an audit firm also certifies the financial statements of the company, retires from the said firm and joins another firm of chartered accountants, such other firm shall be eligible for appointment for a period of 5 years. Okay, so not only a common partner, let's say A is the partner of AB and Associates. Okay, now AB and Associates signed the report of C Limited. Then A retired from AB and Associates and joined CD and Associates. Okay, now A is the partner of AB and Associates. A of AB and Associates signed the report of C Limited. A retired from AB and Associates and joined CD and Associates. Then in this case, CD and Associates will not be eligible for appointment again for a period of 5 years. So we see not only the rotating firm, but in case the partner resigns and goes and joins another firm, then the other firm to which the signing partner goes and joins will also not be eligible for a period of 5 years. Please take about 2 minutes and go through this, and then we proceed. Take about a minute more, go through this, and then we proceed. Okay, we are about to continue. Okay, now illustration helping the case of rotation of a auditor. Okay, now here, A. An individual auditor shall include other individuals or firms whose name or trademark or brand name is used by such individual, if any. Consecutive years shall mean all the preceding financial years for which the individual auditor has been the auditor until there has been a break by 5 years or more. So in case the person was there as an auditor for 1 year, second year not an auditor, third year an auditor, then that will be counted as a continuous appointment unless there is a break for 5 years or more. Okay, so an individual auditor shall include other individuals of firms whose name or trademark or brand is used by such individuals. So if an individual uses the trademark, trade name and brand name of another firms or individuals as well, then those individuals and firm names shall also be included for the purpose of rotation. And then a consecutive year shall mean all the preceding financial years for which the individual auditor has been the auditor until there has been a break by 5 years or more. Okay, so unless and until there is a break of 5 years or more, all the preceding financial years for which the individual auditor has been the auditor will be taken into account. Consecutive years shall mean that. Okay, illustration explaining rotation in case of an audit firm. Here, audit firm shall include other firms whose name or trademark or brand name is used by the firm or any of its partners. So that means an audit firm shall include other firms whose name or trademark or brand is used by the firm or any of its partners. Consecutive years shall mean all the preceding financial years for which the firm has been the auditor until there has been a break for 5 years or more. That means similarly in the case of an audit firm, the audit firm shall include all the other firms whose partners, whose names or trademark or brand name is used by the firm or any of its partners. That means they are under a common trade name or brand name. And consecutive years in case of an audit firm shall also mean all the preceding financial years for which the firm has been an auditor until there has been a break of 5 years or more. Alright, so that is also similar for individuals as well as an audit firm. Then, fourth point, where a company has appointed 2 or more individuals or firms or a combination thereof as joint auditors, the company may follow the rotation of auditors in such a manner that both or all of the joint auditors, as the case may be, do not complete their term in the same year. Alright, so now let's discuss the case where the company has appointed joint auditors. Where the company has appointed 2 or more individuals or firms or a combination thereof as joint auditors, the company may follow the rotation of auditors in such a manner that both or all of the joint auditors, as the case may be, do not complete their term in the same year. So in this case, the company will rotate it in such a way that all the joint auditors do not complete their term in the same year. They complete their terms in different years so that rotation of auditors becomes possible. Okay, and the last point, here the word firm includes limited liability partnership incorporated under the Limited Liability Partnership Act 2008. Okay, so please take about 2 minutes, go through this, and then we proceed. Please take about 2 minutes, go through this slide, and then we proceed. Hi Rehan, thanks for joining in. I think you have a question. An auditor is a person who checks the financial statements of the company. Financial statements means a balance sheet and the profit and loss account, notes to accounts and cash flow statement, and gives his opinion on the financial statements about them being true and fair. Now this is required so that the shareholders of the company get a fair idea about what the company is doing and how the board of directors are managing the company. Okay, Rehan. So we are discussing about the appointment of an auditor and how it is done. Take about a minute, go through this. Okay, now we talk about how the first auditors of a company are appointed. Notwithstanding anything contained in subsection 1 of section 139, that is point 21 mentioned above, the first auditor of a company, other than a government company, shall be appointed by the board of directors within 30 days from the date of registration of the company, and the auditor so appointed shall hold office until the conclusion of the first AGM. Now, please remember, now this provision does not apply to a government company, okay, and all other companies will appoint first auditor within of the company, and this is done by the board of directors. Now they hold the term from the appointment by the board of directors till end of first AGM. Okay, so the first auditor is appointed within 30 days of registration of the company, that is whenever the company is incorporated, and that the appointment of the first auditors is done by the board of directors, and they hold office till the end of the first AGM. So for example, if the company is incorporated on 1st May 2020, okay, so the first auditors have to be appointed before 30th May 2020. This appointment is done by the board of directors of the company, and the auditors hold office till the conclusion of the first AGM, which may be held on 30th September 2021. Okay, or it could be 31st December 2021, as the case may be. So then the auditors hold office from let's say 5th May 2020 to 30th September 2021. Okay, within 30 days of an auditor. Okay, fine. Now if the board fails to exercise its power, that is appointment of the first auditor, it shall inform the members of the company, and the company may appoint the first auditor within 90 days at an extraordinary general meeting, EGM, and such auditor shall hold office till the conclusion of the first EGM. Now, for any such reason, if the board of directors are unable to hold or unable to appoint the first auditors within 30 days of the incorporation of the company, they may inform the members of the company about the same. Then the members of the company may call for an EGM, an extraordinary general meeting, and may appoint the first auditor within 90 days. Okay, and the auditor shall hold office till the conclusion of the first AGM, as the case may be. Example: Managing Director of PQR Limited wants to appoint Sri Ganpati, a practicing chartered accountant, as the first auditor of the company. Comment on the proposed action of the Managing Director. So that's the example. Now we will go to the example in the next slide. Please take about 2 minutes, go through this, and then we proceed. Please take about a minute more, and then we proceed. Hi Abhishek. Thank you so much. Thanks for watching in. Okay, answer. Uh, Provisions and explanation. Section 139(6) of the Companies Act 2013 lays down that the first auditor of the or auditors of the company shall be appointed by the board of directors within 30 days from the date of registration of the company. In the instant case, the appointment of Sri Ganapati, a practicing chartered accountant, as first auditors by the managing director of PQR by itself is in violation of section 139(6) of the company, which requires the board of directors to appoint the auditors of the company. So please remember, as per section 139(6) of the Companies Act 2013, the first auditors of the company are to be appointed within 30 days of its incorporation by the board of directors, and those auditors are supposed to hold office till the conclusion of the first AGM. But in the instant case, the managing director of PQR himself wanted to appoint the excuse me, the auditor. So this is in violation of section 139(6), as the board of directors alone can appoint such auditors. Conclusion: in view of the above, the managing director of PQR cannot appoint the first auditor of the company himself. Okay, then filling up of casual vacancy. Now, casual vacancy as per section 139(8) simply means if the auditor resigns or fails to take up the appointment, then that is known as casual vacancy. And how do we fill up the casual vacancy? We will discuss now as per section 139(8). The board may fill any casual vacancy in the office of an auditor within 30 days, but where such vacancy is caused by the resignation of the auditor, such appointment shall also be approved by the company at a general meeting convened within 3 months of the recommendation of the board. Now, let's say there is a casual vacancy in the office of the auditor due to the death of the auditor, or the auditor does not take up the appointment. Then, within 30 days, the casual vacancy can be filled in by the board of directors. But where such casual vacancy is due to the resignation of an auditor, then such appointment shall also be approved by the company in the general meeting convened within 3 months of the recommendation of the board. So to summarize this, it means, let's say auditor after the appointment fails to take up the appointment on the appointed day, then in that case the board of directors can replace or reappoint an auditor within 30 days. Or in case an auditor dies, then in that case he can the board of directors can reappoint within 30 days. But in case the auditor resigns in between his term, then the board of directors can appoint another auditor, but that will also have to be approved by the shareholders in a general meeting convened within 3 months of the recommendation of the board. Any auditor appointed in casual vacancy shall hold office till the conclusion of the next annual general meeting. So what does this mean? It means, let's say there was an auditor appointed, Mr. A, and he was appointed for a period of 5 years, and he suddenly resigned on 1st May 2020. Now the board of directors can appoint another auditor and also get it approved by the board, by the members in the coming up general meeting. And that auditor will not hold for term for the next 2 or 3 or 4 years. He will hold office only till the next AGM, which may be expected to be held in September 2021. All right. So if in May 1st, 2020, an auditor resigns or an auditor dies, then the new auditor who's appointed will hold office only till the next AGM, where his appointment will be ratified or approved by the shareholders in the AGM. All right, now please take 2 minutes, go through this slide, and then we proceed. Hello, Abhishek. Thanks a lot. Thanks a lot for the compliments. Just doing my bit. Hello, Kuldeep. Thanks for joining in. Welcome to my session. How are you doing? Okay, take about a minute more. Go through this. Any questions? Please ask me. Hello, Kuldeep. Hello, Abhishek. Hello, Rehan. How are you all doing? Thanks for watching my session. Okay, now let's take another example. Prakash Carriers Limited appointed Mr. Raman as its auditor in the annual general meeting held on 30th September 2016. Initially, he accepted the appointment, but he resigned from his office on 31st October 2016. For personal reasons, the board of directors seek advice for filling up the vacancy by appointment of Mr. Albert as an auditor. Okay, so let's look at the question once again. Prakash Carriers Limited appointed Mr. Raman as the auditor in the annual general meeting held on 30th September 2016. Initially, he accepted the appointment, but he resigned from his office on 31st October 2016 for personal reasons. The board of directors seek advice for filling up the casual vacancy by appointment of Mr. Albert as the auditor. Okay, so in the present case, as the auditor has resigned, the casual vacancy so created can be filled up by the board appointing Mr. Albert. However, the appointment of Mr. Albert must be approved by the company by passing an ordinary resolution at the general meeting of the company, which must be convened by the board within 3 months of the recommendation of the board. Okay, conclusion, Mr. Albert will be entitled to hold office till the conclusion of the next AGM. Now, let's look at the question. Mr. Raman was appointed by Carriers Limited, Prakash Carriers Limited, on 30th September 2016. All right. Initially, he accepted the appointment. He said, "Okay, I will work as the auditor of your company." Then, but he resigned on 31st October 2016 for personal reasons. So obviously, there was a casual vacancy that was created. The board of directors wanted to know that how can they fill the casual vacancy by appointment of Mr. Albert as the auditor. So then we need to look at the answer. Now, Mr. Raman has resigned, so there is a casual vacancy created. So the board can fill in that casual vacancy in the board meeting. They can appoint Albert, but the appointment of Mr. Albert must also be approved by the company in the shareholders meeting or an extraordinary general meeting by passing a ordinary resolution. In case the ordinary resolution is done, then Mr. Albert can be appointed as the auditor of the company to fill the casual vacancy created by Mr. Raman, and he will be allowed to hold office only till the conclusion of the next annual general meeting. So let's say Mr. Raman resigned on 31st October 2016, and within 30 days the board appointed Mr. Albert. The board appointed Mr. Albert on 15th November 2016 and immediately called for an EGM on 20th November 2016 and ordered for the appointment of Mr. Albert as the auditor. Now Mr. Albert can hold office only till 30th September 2017, which is the coming up annual general meeting, where again his appointment will be put up, and if the shareholders are satisfied, then he will continue. Okay. Then appointment in case of so we are done with this example as well. I'll give you time to go through this. And then appointment of auditors in case government company or any other company controlled by the state government or the central government. So far we were talking about general appointment of auditors other than government companies. Now we will talk about appointment of auditors in case of government company or any other company. But before that, please take about 2 minutes and read the example, and then we proceed. All right, take your time, just read the example, and then we proceed. Take about a minute more, and then we talk about appointment of auditors in case of government companies or any other companies controlled by the state government or the central government. Okay, let's start off. Now, as per section 139(5), the Comptroller and Auditor General of India, please excuse my straight line, shall in respect of a financial year appoint an auditor qualified to be appointed as an auditor of companies under this act in case of. So we see that a Comptroller and Auditor General of India shall in respect of a financial year appoint an auditor duly qualified to be appointed as an auditor of companies under this act in case of a government company or any other company owned or controlled directly or indirectly by the central government or by the state government or governments, or partly by the central government or partly by one or more of the state governments. So in case of a government company, point number one, in case of any other company owned, controlled directly or indirectly by the central government or any of the state government or governments of more than one state, or partly by the central government and partly by one or more of the state governments. Okay, so then in this case, the auditor of such a company, that is a government company or any other company which is owned or controlled directly or indirectly by the central government or by any state government or governments, or partly by the central governments and partly by one or more state governments, shall be appointed by the Comptroller and Auditor General of India for any financial year. Okay, the auditor shall be appointed within 180 days from the commencement of the financial year. Okay, the auditor appointed shall hold office till the conclusion of the next annual general meeting. So if you notice in this, in the case of government companies or any other companies owned or controlled directly or indirectly by the central government or by any other state governments or governments, or partly by the central government and partly by the state government, shall be appointed by the Comptroller and Auditor General of India. And please note, they will not be appointed for block periods of 5 years. They will be appointed every year. Okay, for every financial year, the Comptroller and Auditor General will appoint these auditors. Now, how are the first auditors of a government company or a company which is owned and controlled directly and indirectly by the central government or one or more state governments, or jointly by the central government and one or more state governments? We will discuss now. In case of a government company or any other company owned or controlled, now see, a government company simply means a company in which the government, whether it's the central or state government, holds the majority shares or 100% shares. Okay, so in case of a government company or any other company owned or controlled directly or indirectly by the central government or by any state government or governments, or partly by the central government and partly by one or more state governments, the first auditor shall be appointed by the Comptroller and Auditor General within 60 days from the date of the registration of a company. So the date on which a government company comes into incorporation, within 60 days, the first auditor will be appointed by the Comptroller and Auditor General. Now, in the case of other companies, how was the first auditor appointed? The first auditor was appointed within 30 days of its incorporation by the Board of Directors of the company. But in the case of a government company, the first auditor shall be appointed by the Comptroller and Auditor General within 60 days from the date of registration of the company. In the case the Comptroller and Auditor General does not appoint the auditor within the said period, the Board of Directors of the company shall appoint such auditor within the next 30 days. So, for some reason, if the Comptroller and Auditor General does not appoint the first auditor within 60 days of its incorporation, then the Board of Directors of the company shall appoint such auditor within the next 30 days. Now, how is it different from the normal companies? The normal companies, it said that the Board of Directors appoint the first auditors within 30 days of its incorporation. But just in case they are not able to do so, then in that case, the members will appoint the first auditor within 90 days of incorporation, will appoint in the extraordinary general meeting. But here the Board of Directors. Please take about 2 minutes, go through the slide, and then we proceed. I'm sorry, please take about 2 minutes, go through this. All right, take about a minute more, go through this. Please take about a minute more, go through this. Ask me if you have any questions. Okay. Now, further, in case, just one second. Okay, now, just in case, let me just change it to, okay, in case the failure of the board to appoint such auditor within the next 30 days, it shall inform the members of the company who shall appoint the auditor within the 60 days at an EGM, who shall hold office till the conclusion of the first annual general meeting. Now, in case of a government company, the first auditor is supposed to be appointed by the Comptroller and Auditor General within 60 days of its incorporation. But somehow, if the auditor and the Comptroller and Auditor General does not appoint the auditor of the government company within the 60 days, within the next 30 days, the Board of Directors can appoint the auditor. But for some reason, if the Board of Directors also fail to appoint the first auditor of the company within the next 30 days, then within the next 60 days, the members or the shareholders of the government company will appoint the first auditor at an AGM within 60 days, who shall hold office till the conclusion of the first annual general meeting. Now again, we discuss about what happens in case there is a casual vacancy of the first auditor of the government company. In case of a company whose accounts are subject to audit by an auditor appointed by the Comptroller or Auditor General India, casual vacancy of an auditor shall be filled by the CAG within 30 days. So in case any company whose accounts are subject to audit by an auditor appointed by the Comptroller and Auditor General of India, and there is a casual vacancy created, that means because of death, or because of resignation, or because he does not turn up after the appointment, then such a casual vacancy will be filled in by the Comptroller and Auditor General within 30 days. Okay, in case the Auditor and Comptroller General does not fill the casual vacancy within the set period, the Board of Directors shall fill the casual vacancy within the next 30 days. Again, if we see, if the Comptroller and Auditor General for some reason does not fill in the casual vacancy within the next 30 days, then 30 days from there, the Board of Directors shall fill the vacancy of the auditor. Okay, then we have reappointment of retiring auditor. A retiring auditor may be reappointed in the AGM if, now we are talking about reappointment of a retiring auditor of a government company. Okay, if he is, so a retiring auditor may be reappointed at an AGM if he is not disqualified for reappointment, he has not given the company a notice in writing of his unwillingness to be reappointed, and a special resolution has not been passed at that meeting appointing some other person or providing expressly that he shall not be reappointed. Now, the retiring auditor of a government company, like we said, he cannot be appointed for a block of 5 years, right? He is appointed every year at the AGM. So every year at the AGM, the retiring auditor of a government company will be eligible for reappointment if he is not disqualified for reappointment. That means he is a person of sound mind, he is not insolvent, or he does not have interest in the company, and for any other reasons he is not been declared as disqualified for reappointment, and he has not given any notice to the company of his unwillingness to be appointed. So just in case the auditor also does not want to be reappointed, in that case he can give a notice to the company about his unwillingness to be reappointed. So in case he has not given the company a notice, he should have not given a notice. And also, a special resolution should not have been passed already appointing some other auditor or providing expressly that he shall not be appointed. In case his service was bad, or the company or the members are unhappy with his service, then they can either pass a special resolution for appointing someone else, or they can pass a special resolution expressly stating that that gentleman should not be appointed again as the auditor of the company. All right, please take about 2 minutes, go through this, and then we proceed. Take about 2 more minutes, go through this carefully, and then we proceed. Take about a minute more. Let me know if you have any questions. All right, let's proceed. Where at any AGM, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. So like we saw that a government company appoints an auditor or reappoints an auditor at every AGM. So in any AGM, if no auditor is appointed or reappointed, then the existing auditor will continue to be the auditor of the company. Then we see the Audit Committee. The Audit Committee's recommendation, where a company is required to constitute an audit committee. We saw in the first couple of slides what company is required to constitute an audit committee. A listed public company having a paid up capital of 10 crores or more, a turnover of 100 crores or more, or a total borrowings and debentures and debts and deposits of 50 crores or more. That company is required to constitute an audit committee. Okay, so where a company is required to constitute an audit committee under section 177, all appointments, including the filling of a casual vacancy of the auditor under this section, shall be made after taking into account the recommendation of such committee. So it simply means if a company has an audit committee under section 177, then the Comptroller General will have to take into account the recommendations of such an audit committee before appointment, reappointments, or filling up of casual vacancies. All right, please take about 30 seconds, go through this, and then we proceed. Any questions, please ask me. Okay, now we talk about another important topic, that is the removal, resignation of auditor and giving of special notice. Okay, now so far we spoke about the appointment, reappointment and filling up of casual vacancy and the qualifications of auditors. Now we talk about the removal, resignation of auditors and giving of special notice. Section 140 of the Companies Act 2013 provides for removal, resignation of auditor and giving of special notice. According to this section, removal of auditor before expiry of a term. Now somehow if the company is not happy with the work of an auditor, or the auditor is involved in a lot of misconduct and disciplinary proceedings, then the company may want to change him. So in case of a removal of an auditor before expiry of his term, section 141, let's see how that is done. The auditor appointed under section 139 may be removed from his office before the expiry of his term only by a special resolution of the company. By special resolution of the company, we mean the special resolution of the shareholders of the company in the EGM, Extraordinary General Meeting, and after obtaining the previous approval of the central government by making an application in form ADT2 and shall be accompanied with the prescribed fees. Now please remember, removal of an auditor is not very easy. You might not appoint him or reappoint him in the AGM, but removal of an auditor in between his term is quite unusual and it's a serious matter. And this can be done only with two conditions. One is it has to be after a special resolution of the company is passed in the EGM, Extraordinary General Meeting of the company, and also that after obtaining a previous approval of the central government. Now why do you think this thing is important? Because there might be instances where the company also is involved in wrong activities or negative activities, and when the auditors would have told them that I'm going to report these activities to the shareholders and to the government might immediately want to, the company might immediately want to change the auditor. So that's the reason why firstly the shareholders of the company should know, and secondly the approval of the central government should be taken. That means there has to be a strong valid reason why you need to remove an auditor in between his term. So after you remove the auditor by passing the special resolution and central government approval, you need to fill in a form which is ADT2 and pay the fees and submit it online. The application shall be made to the central government within 30 days of the resolution passed by the board. So once the board decides that okay, this auditor will be removed from the place of the auditor or auditing the company, then within 30 days the application should be made to the central government seeking for their approval. All right, the company shall hold the general meeting within 60 days of receipt of approval from the central government. So please remember, the special resolution of the members of the company for removal of an auditor before his term can be passed only after the approval of the central government is received, and it has to be done within 60 days from the receipt of approval of the central government for passing the special resolution. Then, giving opportunity of being heard audi alteram partem before taking any action for removal of the auditor before the expiry of his term, the auditor concerned shall be given a reasonable opportunity to be heard. So please remember, like I told you, it's a very serious matter. If an auditor is being removed in the middle of his term, it could be either because the auditor does not want to continue because he's unhappy with the company is not cooperating with him, or it could also be because the company's operations are not very right, and just because the auditor is now wanting to disclose the fact to the shareholders and the government, they might want to get rid of him. So for that reason, first and foremost, they need to get the approval of the central government. Then after the central government approval is taken, they need to get the shareholders approval in the EGM, and only then can an auditor be removed before the expiry of his term. But even before he is removed, he shall be given an opportunity of being heard. So maybe there is there's something to his side of the story as well. So for that, he's given an opportunity of being heard, and after that opportunity is given, then the next step is taken. Please take about 2 minutes and then we proceed. Please take about 2 minutes and then we proceed. Take about a minute more. Please go through this carefully and then we proceed. Okay, now let's take an example of removal of the auditor between his term. Mr. Suresh, a chartered accountant, was appointed by the board of directors of AB Limited as the first auditor. The company in the general meeting removed Mr. Suresh without seeking approval of the central government and appointed Mr. Gupta as the auditor in his place. The first auditor appointed by the board of directors can be removed in accordance with the provision of section 141 of the Companies Act only, and hence the removal of the first auditor in this case is invalid because the company has not taken the prior approval of the central government. So now look at the gist of this case. Mr. Suresh, a chartered accountant, was appointed by the board of directors as the first auditor. So a first auditor is supposed to hold office till the conclusion of the first annual general meeting. The company in the general meeting removed Mr. Suresh, that means before the expiry of his term, but without seeking the approval of the central government, and appointed Mr. Gupta as auditor in his place. Okay, but now we need to see whether it is the correct step or it's not. But now, as per the provisions of Section 141 of the Companies Act 2013, an auditor can be removed before the expiry of his term only after the prior approval of the central government is taken and a special resolution of the members is passed in the EGM. But in the present case, the approval of the central government was not taken, and hence the removal of the auditor in this case was invalid. Alright, so it's not a valid procedure. The company contravened the provisions of this act and it could get into trouble by paying penalties and fines. Okay, so now we go to the next point, resignation. Now I spoke about removal of an auditor, now we talk about resignation. If the auditor has resigned from the company, he shall file within a period of 30 days from the date of resignation a statement in form ADT3 with the company and the registrar. So basically the auditor also has the choice to leave the company, and if he decides to resign the company for whatever reasons, it could be personal reasons, it could be that the company is not cooperating with him, and whatever reasons, if he decides to resign, he should put in his resignation, and within 30 days of his resignation, he should file a statement in form ADT3 and file it with the company and the registrar of companies. Then the auditor shall indicate the reasons and other facts as may be relevant with regards to his resignation in the statement. Obviously in his resignation letter or his statement, he has to give the facts as to why is he resigning and what is the reason. In case it is a government company or companies controlled by the central government or state government, the auditor shall file a statement with the Comptroller and Auditor General of the company and the registrar. Okay, so in case if it's any other company, then it is with the auditor has to give his resignation in ADT3 and with the company and registrar. But in case it is a government company or companies controlled by the central government or state government, the auditor shall file such statement with the Comptroller and Auditor General of the company and with the registrar. Alright, please take about 2 minutes, go through the slide and then we proceed. Please take about 2 minutes, go through this and then we proceed. Okay, any questions? Please ask me. Okay, let's proceed. Now, if the auditor does not comply with the aforesaid provisions, he shall be liable to a penalty of 50,000 or an amount equal to the remuneration of the auditor, whichever is less. And in the case of a continuing failure, with a further penalty of 500 rupees for each day after the first during which the failure continues, subject to a maximum of 5 lakhs. So in case the retiring auditor does not give the reasons or does not file the form ADT3, then in that case he shall be liable to a penalty of 50,000 or an amount equal to the remuneration of the auditor or 500 rupees per day up to rupees 5 lakhs. Okay, now let's look at the next topic about appointment of auditor other than the retiring auditor. Now, like I said, every auditor has to retire after 5 years, or in case of a government company, he retires every year. So in case the company decides to appoint an auditor other than the retiring auditor, we need to follow the provisions of section 140 subsection 4. Okay, so if the retiring auditor has not completed a consecutive tenure of 5 years, or as the case may be 10 years as provided under subsection 2 of 139, that means 5 years for an individual auditor and 10 years for an audit firm. Special notice shall be required for a resolution at an annual general meeting appointing as auditor a person other than the retiring auditor, or providing expressly that a retiring auditor shall not be appointed. So when an individual is appointed for a period of 5 years, or an audit firm is appointed for 2 consecutive period of 5 years, please remember at every ensuing AGM, their appointment has to be ratified by the shareholders. So in case any time the company decides not to ratify their appointment, or the company passes a special resolution of not appointing them, then it can do so. All right, and then a notice of such has to be given. Then on receipt of the notice of such resolution, a company shall forthwith send a copy thereof to the retiring auditor, that a notice has been received for a resolution in annual general meeting appointing as auditor a person other than the retiring auditor, or providing expressly that the retiring auditor should not be appointed. So for this, a notice has to be sent. Please take about a minute or 2 minutes, go through this slide, and then we proceed. Please take about a minute. Okay, if you're done with this, we stop today's session with this. Thank you for being such a lovely audience. And before I leave, I'd also like to tell you to download the Unacademy learning app to go through the various special classes that I've taken on them on various topics ranging from Companies Act and Income Tax Act and accounting. So you can benefit from that. Give me a feedback and also ask me any questions you may have. And also, I would like to remind you about the Plus platform of Unacademy, which is a payment-based subscription model, which has various packages. The packages for the CA subscription, CA Foundation and Intermediate subscription are for 1 month, 3 months, 6 months, 12 months, and 24 months. And while you choose the package of your choice, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the listed price. And the Plus platform gives you many benefits like chatting with your educator, conducting live tests and quizzes to help you evaluate your performance, to get to know your weak areas and your strong areas. The courses provided by the Plus platform are structured. They are structured because they are in line with your exam syllabus. And lastly and most importantly, the one subscription to the Plus platform gives you unlimited access to the live and recorded sessions of your favorite educators, your favorite topics, and all this at the convenience of your device, that is your desktop, laptop, tablet, or mobile phone, at the convenience of whatever location you want, and also the convenience of whatever time you want. So I strongly recommend you to join the Plus platform of Unacademy as soon as possible and make the most in accelerating and enhancing your preparation for the CA Foundation and Intermediate examinations. I thank you very much, and until next time, thank you and take care. This is Prathik Gupta signing off. You can also view my other sessions on YouTube. You need to look me up as Prathik Gupta, Prathik Gupta, and go through all my sessions and benefit from them and ask me any questions you may have. And you can also go through all the special classes that I've taken on the Unacademy learning app and benefit from that, and ask me any questions that you may have. All right, so please do go through these special classes, and I also will be taking a lot of special classes on that platform very soon. So I request your presence in those sessions. So please do join me in the various special classes and my sessions on YouTube that are going to be there on the near future. Until then, thank you so much, and have a good night.